Good evening, everyone. Today, let me talk about what is the stress test in a mutual fund scheme. So, of late, we have seen that there has been a lot of inflow into the small cap and mid cap mutual funds, and it has really stretched the valuations of the small cap shares beyond imagination or beyond reasonable means. Now, it has led to an action by SEBI whereby it has asked MP to instruct all the mutual fund companies, so called asset management companies, to basically test their schemes for the stress test and basically produce the results on certain time period, I think every 15 days. Now, what is this stress test? To understand the concept of the stress test, one must understand the concept of the liquidity risk. Now, the liquidity risk is when a certain security becomes illiquid. For example, let's say that you have bought or I have bought a share of a small cap company at 500 rupees. After that, its price reaches 2500 and no fundamentals justify that pricing. Now, what happens is because of recession or any bad news, the market falls and the stock price of that particular security falls from 2500 to, let's say, 2000. Okay. Now, in that scenario, what will happen? That some of the investors would want to book the profit, and some of the investors may also get nervous. So there would be a lot of selling pressure on that particular security. That means that particular small cap share. It may lead to a scenario where there would only be sellers and no buyers of that security because it is falling so speedily, and it is basically getting caught into the lower circuits. So nobody is ready to buy it. That scenario is called liquidity risk. Generally, small cap shares and smaller mid cap shares. Now, in mid cap also there are, practically speaking, two types: large mid cap shares and small mid cap shares. So the shares with a market capitalization on smaller cap side, mid cap shares with a market capitalization on the smaller cap sides, these are the shares which are prone to such liquidity risk. That in case prices of such shares start falling, it may lead to a scenario where nobody is ready to buy it, and the holder of that particular security is caught into a situation that he or she wants to sell off this particular security at any price, but nobody is ready to buy. Now, the same concept can be replicated to or can be applied to the mutual fund schemes as well. Now, if we look at any small cap mutual fund, now let's take a small cap mutual fund scheme X. Let's not name any scheme. Let's say that its asset under management is its AUM, that is asset under management is let's say 25,000 crore, 30,000 crore. Fine. Now, that's big money. Now, what happens? That whenever a mutual fund scheme gets this money, asset under management, it keeps certain amount of that in liquid funds, so that in case there is redemption from any customer, they can basically give that money to that customer without having to sell the underlying securities of that mutual fund. Now, what happens is that when market starts falling, a lot of customers who may have invested in small cap shares, I mean, in a hypothetical scenario, they get nervous. So let's say out of 40,000 crore rupees or 30,000 crore rupees AUM, 15,000 crores of redemption pressure is there. Half of the customers want their money back. Out of 30,000 crore of AUM, 15,000 crore rupees are to be given back. Now, what would have happened is that the company, the asset management company, would have kept aside 10 or 15% of the amount in case of any redemption requests are there. So the company would have kept around only aside only 3,000 to 5,000 crore rupees for this redemption. But because the redemption pressure is up to 50%, 15,000 to 20,000 crore, the fund manager will have no choice but to sell the underlying securities of that mutual fund portfolio. And because the fund manager holds these small cap shares in large numbers, so when this fund manager starts selling the small cap small cap shares, obviously it would be in large quantity, and it would lead to a scenario that in the market, because the price of that share starts falling very rapidly, there would be no buyers, and because of that, once again, the fund manager would not be able to liquidate the underlying shares of that mutual fund scheme, and that means the fund manager will have no choice or no way to return back the money of the investors. and he will have to convey, the mutual fund company or asset management company will have to convey to the customers that the money cannot be returned back. The same type of scenario had played out with a certain debt schemes, if you remember, during the COVID times. Let's not name the schemes, whereby the redemption was not allowed. And let's be very clear that the same kind of scenario can also play out even with the equity mutual fund schemes, especially the small cap schemes. So this is not something hypothetical, and SEBI has really been clear about it. So I made this video just to help you understand what this stress test is. Now the stress test, let's come to that, because now we have understood what is liquidity risk. The stress test is one kind of simulation under which the mutual fund company will come up with a kind of you can say they will run some sort of you can say some sort of hypothetical scenario. They would create a simulation under which they will basically try to identify that in case there is a lot of redemption pressure, in case 50% of the customers withdraws the money or request the redemption, then how much time it will take for the mutual fund scheme to liquidate its shares. Okay, so I will not name, but there is a very famous mutual fund company's small cap scheme, and as per one article I read in the Economic Times, it may take around 50 to 100 days to liquidate all its assets. And that means the small cap scheme, if the redemption pressure is very high, then it may take up to 100 days to sell off all the shares which are there in their scheme. So those who have invested in small caps mutual funds should be mindful of this particular risk, and this risk may become a reality. I am not saying that it will become a reality, but chances that it may become a reality is such chances are more when the valuations are very stretched and when sentiments are not good. And right now it seems like SEBI is little bit worried on that front, and that's why it has asked MP to instruct all the mutual fund companies to basically perform this stress test and produce the results in front of us. I hope this video helped you out with understanding what stress test means and what liquidity risk means. Thank you very much. Jai Ma Kodiyar, Jai Siya Ram. Good night.